Good morning, everybody. Welcome to another Daily Market Report brought to you by Mike Bjork. Today is Friday. Happy Friday, everyone. Hope you guys got some great plans for the weekend here. It is Friday the 19th of October, and we got kind of a quiet day, more or less. We got one economic news here, and that is the existing home sales for the month of September. So, previous month in August, we had 5.33 million analyzed units for sales, and it was supposed to dip down a little bit to almost five and a quarter, 5.27, and it dipped down a little bit further. This is about 3.4% of a drop, down to 5.15. So obviously not great news there. We got a couple of things you can read into this. The, inventory is low, but it's starting to get into a normal market. It's about 1% higher than what we had last year. So we can't really use the inventory level as an excuse. But to be honest, it's rates. Rates are going up, and it's starting to show its effects on there. I know locally where I'm at in Redondo Beach, homes that are about a million plus. Those are sitting on the market longer, and anything below a million are a bit more affordable. So those are getting more or less gobbled up, so to speak. So there's more of a market for those properties under $1 million locally here. Now, on other markets, that could be a completely different story. So, as rates are going up, it's getting affordability is kind of making it a little difficult for people to get into a property, or maybe people are just aren't comfortable with payments or comfortable making purchases that high, or they see a lot of reports out there. So it's our jobs as real estate professionals to kind of provide them the information and let them make their decisions. So let's kind of go ahead and jump ahead here. Headline news: stock market's up this morning. Of course, we got Q3 earnings, but some stuff going on geopolitically. We have China came out with their GDP, which dropped. It's kind of funny how they complain about 6.5% GDP, where we're seeing anywhere between 2 to 4%, which is great for us. But they're complaining. But the reason being is that it's dropped from 6.7 down to 6.5%. There's a lot of the trade speculation. So this has got investors concerned more on a worldwide, global of expansion and such. So I think this could be an issue that could, if the China is still kind of going through some of these pains, that maybe this could trickle down into the emerging markets and obviously the U.S. as well. And this could eventually affect a global level on the viability of the economy and stuff. Saudi Arabia, of course, has been in the news because there's a lot of speculation of a journalist that is Saudi descent, but is American citizen, a reporter with the Washington Post that may have been, allegedly been killed. So there's a lot of tension between U.S. and Saudi Arabia at this point. This is important primarily because this could obviously, if the U.S. retaliates or does anything, it could lead to higher oil prices. So that's one of the issues right there. The ramifications of this. So let's jump ahead, see how the bond market is reacting. The bond market is not doing so well. We're down about 14 basis points. We lost a lot of the gains we had yesterday, but as you can see, we're still kind of in this elevator going on, or escalator going downwards, still going in that level there. So we're down about 14 basis points, which translates, yes, to higher interest rates today. So interest rates won't be as good as what we saw yesterday. And we are getting close to this floor of support, so it's potentially we could probably continue to hit this before we see any spike upwards. So just be a little cautious out there. And here's the yields. The yields are right now are trying to fight above this the ceiling here at 3.19, and right now it's at 3.19 exactly, and try and again breach above it. If it breaks above it, this could put more pressure on mortgage-backed securities, which will raise rates, as well as put more pressure on the stock market. And the next level, as you can see here, is at 3.25%. So if this could hold, this will help stabilize the mortgage-backed securities as well as the stock market as well. All right, so that pretty much wraps things up. The rates, unfortunately, did worsen a little bit today compared to what we saw yesterday. But if you guys want to see any market changes or get updates, just come over to Twitter. You can follow me at Mike Bjork and get your updates there. You guys have a great rest of your day. Enjoy your weekend. We'll look forward to see you guys on Monday. Thanks for watching. Bye-bye.